Hi, my name is Francis Macdonald, and I am CEO of Lift Power. Lift is a mineral exploration company, and we're focused on the exploration and development of hard rock lithium deposits in Canada.
Good to see you, sir. Right, busy times out there, and you guys are cracking on a few fronts. I just wanted to catch up with you with regards to announcement you put out with regards to surface exploration program at Cali. What's going on, and why are you doing it?
Cali is one of the projects in our portfolio, and it hasn't gotten a lot of attention to date. And the reason for that is because no one from Lift had actually been on the ground yet. So in early July, we went to the Cali Project for the first time. And what was described in the past in old reports was a pegmatite dike swarm that was full of spodumene. And when I say a dike swarm, what that means is you have a whole bunch of pegmatite dikes or veins over within a certain corridor. So we went out there, we're cracking rocks, and they're full of spodumene. I mean, really high-grade spodumene. And basically, the old work that was reported checked out. So that was a huge plus for us to get on the ground and see that.
Okay, and just talk to me about the process that you went through at Yellowknife when you were counting those pegmatites there, and obviously the success that you've had there. In terms of the same process, because you're effectively dealing with a similar scenario here over in Cali. So what will be the process there, and how much time, money, effort will be spent on that?
Sure. So the process at Yellowknife was quite simple because the lithium pegmatites are sticking out of the ground. You can see them from space. You know, it's a big white wall of rock, and we're basically just drilling underneath those. Cali is a little bit different. There is some soil cover and scree or loose rock cover on top of a lot of the dikes that we're seeing, but they do outcrop in the hill slopes. And so we're using that outcropping exposure to understand what we think is there. But what is also on surface is a huge boulder field. And this is just, boulders. It could be fist size, this size, or they could be car sized. And there are huge amounts of spodumene-bearing rocks all over the place. So it gives some kind of indication that the grade is good. And now it just comes down to how wide are these dikes at depth. And in order to understand that, we really need to go out and start drilling.
Right, okay. So in terms of, I'm not saying it'll be a slow burn per se, but it's a slightly different process. Therefore, what will take slightly longer, will take a bit more money. I mean, how should we look at that? I don't want to get too excited too early. So what should I expect coming down the line?
Yeah, so the drilling season is different at Cali because this is located in the western part of the Northwest Territories, and it's in the Mackenzie Mountains. So it's high elevation. It's not completely remote because there is a road that's about 6 kilometers from the deposit, and there's a past producing mine that's 50 kilometers away that we could potentially use as a base for a camp. So that just changes things a little bit just because we are a little bit more remote. The drilling season, it's really, I would say, June till early September, and we are past that, so we can't start drilling this year, but this will lead into a big drill program next year. And the surface work that we're doing right now should give us enough data that we need in order to plan a big drill program. And when I say a big drill program, because we have a limited window that we can drill up there, we want to go up and get an answer next year, similar to what we've done with Yellowknife. And we'll go out with a significant amount of meters. I don't know exactly what that number is yet until we have the results back from this summer's program. But the idea would be to do exploration and resource development at the same time and make sure we have enough meterage that we can basically come out with a resource after next summer's program.
Wow, hot and heavy. So how much money are you allocating to that then?
That's hard to say right now. We haven't budgeted it yet, and we don't know what kind of meterage that will be yet. And because it's not starting until June next year, we've got a bit of time to figure that out. So I don't really want to put a budget number on it, but it's probably in the range, like just to really ballpark it, of let's call it between 15 and 30,000 meters of drilling. that would give us enough meterage, I think, in order to really understand what we have there.
But in terms of looking for a resource off the back of that drilling, did you say? Sorry, did I hear you on that?
Uh-huh.
Wow.
Yeah, exactly.
Okay.
Yeah.
And what's the imperative? Why rush to that? That's very un-Canadian of you. People like to keep drilling and not bother with that. So what's the driver there?
It all comes down to the lithium market and the real high level macro aspects of it. We've seen a significant amount of capital that's coming into the lithium space, and we're looking at this as it's a race. The people that get projects up and running sooner are going to win, because eventually the world's going to be flooded with lithium. And the people that have got their projects up and running and paid the capex off while prices are high are going to be in a much better position than if you're starting to build a project 10 years down the road. So for us, in everything that we're doing, we're considering time to be one of the most important factors rather than the budgetary constraints. And that's just how we're operating. And if we have a constrained drilling window, what I've told everybody is like, look, we need to get the answer next year. We're not waiting for drilling season of 2025 to understand what we have. Like, we need to know next year. And then we will use our field season for 2025 in a different way, not for drilling. It'll be for more studies and environmental baseline work.
Okay, maybe there is a lot to get excited about then. I was trying to temper this, but feels like if you're looking at time as a tool that you can use, then that's good news. And of course, you've got the cash reserves to back that up. Look, let's jump over to Yellowknife. Fires over there. I know you made a bit of an announcement about that. How's that affecting you?
Sure. So Yellowknife has been affected by wildfire. So there's a wildfire that was within 15 kilometers of the city of Yellowknife, and Yellowknife is about 20,000 people. The fire was moving quickly and the winds were blowing it towards the city. So the territorial government made the decision to evacuate everybody out of the city of Yellowknife, and that was about 2 weeks ago, or a little over 2 weeks. So during that time, the fires have basically stalled. They haven't really advanced towards the city of Yellowknife anymore. So things have stabilized for the time being. They're not fully under control at this point, but the situation's not looking as dire as it was about 2 weeks ago either. So there's potentially people will start going back in, essential workers, at some point. There's no defined date for that yet, but it's looking positive, I would say, compared to where we were at about 2 weeks ago.
Right. Okay. So I guess monitoring the situation, see where we're at. I've heard some horrific stories, so hope everyone's safe. Let's talk about the some of the drill data that did come out. You're getting the grades of above 1%, which is all good news. But in terms of the intervals and locations and the data that you're gathering on this one, what's it starting to tell you? What's the picture it's painting for you?
The drilling to date, I think, has been really positive, and it's showing that what we have at surface is continuous at depth. And I think we've seen surprises for both the positive and negative, as you will in any kind of drill program. So we see some areas where grade is starting to drop off, but we're also seeing areas that aren't as high grade on surface that the grade is increasing at depth. And then in terms of geometries as well, we're seeing that dikes are coming together in certain places. So we are doing exploration, but also resource development at the same time. And that's in line with the strategy I was talking about doing everything now, as soon as we can. And it's from an exploration strategy standpoint, it's a bit higher risk because you're not doing things slowly. But there is a much bigger risk that we miss this window in the lithium market. So that's the reasoning for that kind of strategy. I would say we're kind of par for the course right now. It's what we expected. There's, like I said, some negative surprises in terms of grade in certain places, but also positive surprises that things are coming together and grade is increasing in other places.
Right. So getting that balance between understanding the ore body completely to optimize the best possible return versus missing the market a time not being your friend in that case, and getting that balance right seems to be, high on the agenda here. So in terms of what you as a company are trying to do, I know you kind of want to do things quickly. Remind me, to what end? Who are you? Again, I talk about this painting pictures. Is who are you painting this picture for? Who is likely to come in and look at the data that you're gathering and take advantage of that?
Yeah, so that's a good question. It's just kind of what's the corporate strategy and where do we go? And the main focus for us right now is just building lithium resources, because there are a number of chemical plants that are being built to produce lithium hydroxide or carbonate. What a lot of these chemical plants are missing is the actual spodumene feedstock in order to make lithium chemicals. So I think just owning lithium resources right now is one of the biggest value creation events that we can participate in. And that's really the focus. And so we're doing things quickly. We will be building out resources quickly. And then it comes, what's the next step after that? I think that getting into a preliminary economic assessment is obviously the next step. And for some place like Yellowknife, I think it's going to look incredible because we're close to a city. We have infrastructure. People can live in Yellowknife and drive to the mine at night rather than putting a camp, housing people out in the middle of nowhere. And I have a friend who was working in an area in BC. He was saying that for remote camps, it's about $100,000 per year per bed. And so if you're talking about a 100-person camp, that's $10 million a year in operating costs for a 30-year mine life is $300 million. So, what does that do to your NPV on a study? Where you could have people living in the city, driving their own cars to work, going home at night, you're not feeding people, housing them, and those kind of things. So I think putting out a PEA on the Yellowknife project is a big milestone that we're aiming for. And the critical path for Yellowknife is permitting. So that's just it. It comes down to the baseline data that we have in the whole permitting process. We have the team to take this to production. We have the team that has permitted mines in the Northwest Territories before. And so we could potentially take this all the way to production. We're not mine builders. And so, I don't want to say that we're going to build a mine. The team would have to change. But, I think as long as we're de-risking this from every standpoint, that's all we do. We just keep advancing it.
Right. Okay. And so, what's the timing of a PEA? What again? Are you looking to expedite that?
Sure. Yeah. I mean, it would be a PEA off of an inferred resource, so we need the inferred resource first. But we've started. We were going to start drilling wells this week for hydrogeology. That would go into a PEA. We're planning on doing geotechnical drilling in January. And so the idea is to do all of this preliminary work that would feed into a PEA. And then once we have the inferred resource, we would kind of rejig everything. And, at least we've done the work that we could do before we had the resource. And so when would a PEA come out? I mean, it's kind of undetermined right now, but I would say probably in early 2025.
Okay. That'll be interesting. And just your thoughts with regards to the markets. Obviously, it's been quite a tricky, tumultuous year for lithium pricing since, well, I guess this time last year, right? It's been quite the ride. What are your views on pricing? Obviously, you got money in the bank, so and I guess in a meaningful way at the moment it doesn't really affect you, but you've got to have a sense of where this is all going and how you come back to your kind of corporate strategy, how you play this market, how you kind of play positioning yourself in this market.
Yeah, I mean, obviously the lithium prices have come down in the last months, and I think it's at a 20-month low right now. So that's a bit of a headwind, and in terms of the stock price or the valuations for lithium companies. From our standpoint, and looking at it from a really high level, I still don't think that anyone really knows where the lithium is going to come from in order to facilitate this green energy transition. And you have lithium producers that are looking to make equity investments in companies. I mean, we saw the investment by Albemarle into Patriot, and SQM was looking to take out Azure in Australia. So for lithium projects that look like they're going to be significant, I think there is always going to be a market for them. And so how do we play it? I mean, we just keep proving that we have a significant project going forward. And, I think we will have some success in the market at that point.
Okay, interesting. Well, look, I appreciate the update today, Francis. Let us know when you get back. Then obviously the job are turning again, okay?
Great to be here. Thanks, Matt.